Hello, everyone. Jesse Webb, Traders Pro. Market conditions dropping still and remaining in that bearish in a bull market. Some acceleration yesterday on S&P 500. And we're going to keep a closer eye on this number right here, 1372. Start to see if that starts to tick down, because we're starting to see this number starting to flatten out right here on this upper range, and that's what that number is right here, 13.72. So we're definitely extreme to that upside in this uptrend currently, and starting to see some additional cracks in this trend. I'll show a few different data points here. Short term, we're seeing momentum now sliding definitely into that bearish trend, working its way down towards that the bottom end of that range. And we'll look at a little clearer chart right here, but we're sitting right about here. So we could see maybe a little counter trend move and then some capitulation selling downward. There's some support areas that we'll take a look at here in just a minute also. And breadth also in this range. Sentiment still in this complacency zone, hasn't ticked down. That one takes a little bit of time to move. Typically, once you start to see that acceleration in trend, then you'll start to see that move here as well. Still not a lot of fear in the market right here. Buy sell ratio getting quite wide. We've got it down at 0.29. Some of those other moves back here where it really gets widened out is, down into that 0.14, 111, and we're at 0.2. So could continue to see some acceleration. This is one of the things I've talked about now for this last few months is the expansion of these. You can see how high it could get and how high it actually traditionally was, but this last few months we've been relatively tight compared to where we typically are. So now we're seeing a breakout of that range. So we could be back to a little bit more intense volatility here, potentially to the downside, with this risk increasing now with more stocks trending lower. And that's essentially what a market is a group of stocks. This is just kind of our perspective of how that looks. So we're accelerating to the downside. Sentiment also, we had that upper range, tagging that upper range, and working our way back down to the lower range, and could see that in a few days if we continue this overall trend the way that it's been, relatively quick selling. Let's look at that SPY chart, and we've got that which was working down. We've been in this upper trend zone for quite some time. And now we're starting to break back down through that and working on this next zone. If we continue to stay below that range, then this will probably be our next stop on SPY. Obviously, we get backs and fills, we get a rally and a counter trend, but we'll see if we bounce right here. If it's going to bounce, it's got to happen real soon around this level. Typically, that's where that momentum range starts to happen, but we've now slid pretty aggressively back to that zone. We'll watch to see if that ends up holding. And we've also got, let me get my pointer tool there. One other thing to look at is when we go to the sectors and we go to the sectors ETF, and I can sort that by signal. You can see the vast majority of all these are now in downtrends, which is, you've got basic materials, consumer services, industrials, real estate, tech, utilities, consumer goods, transportation, and the rest of them are in hold. So we're seeing an acceleration across the board now to the downside. This is, it's getting more and more significant right here because this broad base, it's becoming a broad-based sell-off. It's happened kind of calmly, but we'll see if we get any kind of acceleration, and if we get any kind of support and bounce right here. The more that the longer this takes place, the harder it is going to be to rally and counter trend back up the other direction on some of these, on the market as a whole. If we look at some individual stocks here in the new buy list and see if anything looks interesting, oil and energy, FTI is that first stock, trending nicely, still within this upper trending zone, and watching for, we've got a pretty ugly little reversal tail bar right there pulling back into that range. We'll see if that ends up happening on that stock. I don't know what's happened to my pointer thing. Oh, there we go. Let's see, let's refresh this and we'll move on to this next stock here where we've got in this new buy list. FTI, and then BZH, Beazer Homes. This has been a high flyer now for quite some time. It continues to trend nicely and finding some support, bouncing a little bit. We'll see if it retests. In these market conditions, these are definitely not times to be looking for aggressive new plays or aggressive new stocks to be adding to the portfolio, because we're now fighting this shorter term trend. We don't want to fight the trend. We want to let the market conditions stabilize and then start to move back to the upside. But that being said, we are seeing different sectors that are going to continue to move as we rotate out of one sector into others. We'll see new momentum stocks that start to fill these gaps right here. A lot of those are going to be these oil stocks. So we're seeing gas, oil, and energy starting to move back up inside this upper range. As I've mentioned in the last few posts, we've got this upper range that we're focused on. When a stock is trending, it'll pull back up. The fib snap tool will connect to those locations and it'll automatically continue to move. So as we're moving along each day, as long as we're staying above this range here currently and this stays snapped to that current high, that's our support zone. That's going to be our location, our range that we want this stock to be able to maintain. And we'll see if some of these continue to do that. So XPRO, SAIA, transportation, trucking stock also in that upper range, but you can see that little reversal bar. Maybe give those a couple of days to pull back, see if there's any support, see if you wait for another confirmation bar back to the upside. Nice looking pattern there on that stock. Buyout stock, we skip past those. Sometimes those take a little bit of time to clear out till those ticker symbols change. Decker Outdoors, shoes, related apparel. You know the company. Interesting to see some retail stocks doing well and continuing that uptrend. This is now back up in that buy zone. And watching for a retracement on most of these to see if there's going to be some continued sliding here. A big gapper here on DLO will move to clear up into that extreme range. For whatever reason, we'll sit tight on that one and not interested when we get those big gaps at that point. TJX, this is not a bad move. Again, another retail stock moving higher up into that upper zone, a big gap, move too extreme, give it some time to pull back into that buy zone on a stock like TJX. That'll do it for today's update. Everyone have a fantastic day today.